This is Scott from Scott Pulsani Trader. In this video we will go over drawing zones. Obviously the core of my trading. So the first thing you want is to make sure this crosshair is enabled. That is going to help you determine the prices that happen in these volume spikes. So I am just using the subchart, the SI subchart, which is down here, to draw these zones. We have the on chart as well. You can see here, for instance, this does help you distinguish, but you can see 1,000 icebergs executed right there. But I'm drawing my zones based off this subchart. So the other thing here is a lot of times you will get the spike, and depending on so we're using reset mode, which we talk about in another video, but depending on the mode that you're using and the time period. So we have our icebergs. I have my icebergs set for 1 minute, so meaning it will a lot of times trigger the iceberg, like right here, which was only one price per se, and then when you see a flat line like this, well, the other prices weren't really involved in that iceberg. The general rule of thumb is, especially if you're just learning how to draw these zones, is to incorporate all the prices that happen in that spike, because you're going to get instances where you do get a plateau like this, which weren't really part of it, and then it'll increase, and we'll go over that in another market that I'm going to show you here. But in this instance, there were back-to-back icebergs, and we're going to go over combining these two, but at the time, and if you're watching this real time, this is how you would draw this zone, right? So first thing you want is the crosshair activated. That's up here. And then you want to take off your bubbles, and you want to draw your zone with this last price line. This is the last trigger price line. This is talked about in another video, the settings video, but once again, right click, go to configure visible components, and make sure last price is checked, I should say. So what we want to do here, again, you can see on the on chart that this spike was basically one price, but I'm going to incorporate all the prices that happen in this spike, and we're going to see those are still relevant when something else came in here right after. So there are hotkeys for this, and once again, another video, but if you want to do it this way, this drawing tool is so antiquated. I understand they're in the process of making a new one. Hopefully it's comes out soon, but we gotta use what we have. So you want to incorporate all the prices that happen in the spike. So the price came down to here, and during the spike up to here. So that's how I would initially draw that zone. And then right after that, you had a spike of another 656. So this is not threshold, but the whole idea with these areas is we're looking for trap traders, right? So in this instance, somebody's trying to sell this thing, tried to sell it here, ran into a mouthful of 1,000 ice. Somebody tried to sell it here, another 656. So the bottom line is in this zone, you've got 1,700, close to 1,700 buy ice. It's very important information, right? So I would incorporate. In this case, it's not. There's no subjectiveness. I mean, there's no like confusion. The second iceberg happened inside this zone, so that's exactly how I would draw that zone. You don't have to expand it because of the second iceberg. We'll have an example where you actually do. So that's how I would draw that iceberg, and then I believe there was one more. This was not threshold, so I would not draw that. That was up here. It was close, but as we talk about another video, as far as thresholds. There's certain times where I don't really ever go under the 700. I will increase it if I see huge ice over and over and over, or huge stop runs. I will increase it for that day, but I don't really go under the 700 threshold for ES, for example, unless it's back to back like we just showed here. So here's another example of an iceberg. Let's go one by one here. So this actually is back to back ice, right? So you had here. This is 699, so it was one contract away from threshold. And then right after that, you had another 549. This obviously is not threshold, but these are right on top of each other. Most likely the same house. I will incorporate both of these. It's almost 1,200. It's over 1,200 buy ice, right? So once again, you take off your bubbles, and you want to incorporate all the prices that happen in this spike with the last price line. So you can see it started here, use your cursor, it started there, but it popped up to there. So I would draw that as the top of the zone. And we'll change the colors here, and it came up to here during this spike here. So you can see here, so this is a good example of if I drew this, so let's just draw this initially like it looked right here. So this is how I would draw this based on that first spike. Let's get this a different color just so we can separate. So that's how I would draw that original zone. And then right after that, you can see it came back in. So what I would do is just expand this to incorporate this ice too, 549. So use your hotkeys if you want. That we talk about in another video. That's the zone I would have for over 1200 buy ice. Started over here. All these prices were incorporated in this zone. So that's exactly how I would have that zone. As you can see here, this is for another video. This is about zone drawing, but the market responded to this area. There was 1,000 plus buy ice here. Actually, it was more than that. Whatever we said the second one was, I think it was 1,500 total, or 1,600 total. That was that zone, and then someone was still buying it. This area held and launched. Right? So that's why we draw these areas. Again, this is for another video. And you can see the market came down, retested this area. Well, this is at the close, it didn't really bounce, but these areas are very, very important. That's the whole crux of the trading. So let's go to another iceberg example. It doesn't matter what market you're trading, it's the same stuff. Sorry, I already had this drawn. Let's get this out of here and do it from scratch. You just need to know the thresholds for your market. So if I was watching this, which I was at the time, this is the first area that came in. You can see here right at the open, 300 buy ice. So I would, again, it normally looks like that. Take your bubbles off. So there was sell ice here too. You can see this black line. So my ice is black and yellow for the on chart, just our black and white actually. I don't know why this is showing yellow. Or maybe it is black and yellow on this one. Regardless, it doesn't matter. I'm drawing this iceberg. So right here, this is actually a battle of icebergs, right? You don't see this all the time, but this is showing you net. So the buy icebergs were bigger than the sell icebergs. That's why it's showing you a spike on the positive side versus the negative side. So you had sell icebergs on chart, you had buy icebergs. Again, I'm drawing my zone off of that. The point is the area is important, right? There's somebody selling, somebody buying, somebody's going to be wrong. That's what we're looking for. So during the spike, price spiked up to there on this buy ice and came all the way down to here. So that's how I would draw that zone. And then the market moved a little lower. So that was in here. So that was sell ice, which is right in the same area, but that's not what I want to show you. So that actually did respond to that area. So the whole idea is you do want to draw this if it's if it's a different price area, then you want to draw this. But this looks like it was pretty much the same area. So what I would do here, this is a good example of subjectiveness, right? So we already have that one drawn. Then sell ice came in. Well, let's incorporate all of it because, like I said, somebody's going to be wrong out of here, and somebody's going to need to get out of the trade, an entity or whoever it is, right? So let's just make this one bigger zone. I'm going to incorporate this buy ice and sell. You don't see this very often where you see battling ice like this, but this is good to show you that you're going to get some instances where you're confused, like, well, what do I do here? Just incorporate all of it in one area and trade off of that area, right? This is only a 2.5 cent area, and there's a lot of investment in this original area. All right, so we got that initially, and then come over here. Market actually ripped back through it, held it, and then you had, so this is a good example of more subjectiveness where you have to decide if you're going to incorporate all the spikes of buy ice. So the way this looked originally you're looking at this first spike here, right? There's your crosshair, incorporate all the prices. That started right about there. So I want to get that up to there. I'll change the colors here to make it easier to read. And that came basically down to right there. So that's how I would originally draw in this zone, based on threshold, buy ice, this was 303 buy ice. So then trade continues. You had some more. So this is a good example of subjectiveness. You have to decide, hey, this wasn't threshold, because threshold on soybeans is 150. This was 140. Do I want to incorporate that? I personally want to incorporate it because we're just looking for areas, concentrated areas of volume where traders are loaded up, right? So, and then you can see right after that. So if I was looking at this just like this, I'd be like, okay, I'm going to incorporate that. So I would do this. And make it like that. Again, use your hotkeys. And then you can see then more ice came in here. This was another 204. That was threshold, and it went a little higher. So you can see it on the chart here too, the yellow line. The point is, get it all in one area. This is a great example of you have to make a decision what you want to use. I mean, you could draw a zone just solely based on this, but I mean, why would you just draw this zone, right, as is, and ignore that and that? I want them all, right? So yeah, this is a large zone, especially for soybeans, but it's an important zone. It's for traders. Someone's selling this like crazy, and they're getting mouthfuls of buy ice. And you can see here, this market responded to the area. This is a Titanic setup, covered in another video, and it launched from here originally like 13 cents, came back, look at the area it held, launched again. All right, so this is why we draw these zones. So that is another example of that, of icebergs. Now we'll get into stop runs. Let me there's some crude here. Actually, this is another iceberg. It's both. It's stops and icebergs that we can show you here. So this was the first stop run of the day. Right at the open, the pit open, see 352 stops. This is double threshold for crude. So this example. So this is the sweeps indicator that I highly recommend that you have. It's part of the Global Plus package versus Global, but it helps you draw these stop events much more precise than just using the on chart or the sub chart, right? So you can see these sweeps started here, right, and it triggered these stop runs. So like I talk about all the time, the sweeps get first. So someone comes in and drops a sweep in the order book. Actually, we sell sweeps. They get first right to the orders. Then the stops fire off. Then they come in after. So you don't know, actually, this one really doesn't matter. I take that back. So so someone tried to sweep here, and then it did trigger these stops. So this is not a good example. I'll show you. There is another example in NASDAQ. So regardless, here's your stop run. You can see it here. You can see it on chart. It started there. So like I've said before, a lot of times these stop runs, you'll see them start before the spike. It's some kind of quirk in the software that the Bookmap developers know about. There is a reason behind it. I can't remember. It's not important right now. All you got to know is you have your on chart on, and you can see the red line. That's where the stops actually started, and then here's your spike. Stop runs are different than icebergs. They sometimes start before you see it on the spike. Just look at the red line on your chart and the sweeps, and that'll help you draw the zone. Right. So let's change this color. Make sure we got all the prices in that. Doesn't look like we did, so this is a very good example of. So I did not incorporate all the prices that happened in this spike, right? In this instance, this was the actual stop run, and it plateaued. So do you really have to incorporate these prices? Were these part of the stop run? Yes, yes and no. So no, I mean there weren't really many after that, but it did go a little more. So unless it's egregious where you just see the one stop and then say for instance did that, and because remember this is based on the reset mode that goes for a full 10 seconds. Well, these prices obviously wouldn't. This is going to show draw for 10 seconds. The rule of thumb is just to incorporate all the prices that happen in the spike. So I mean, it's only a few more ticks. I would just be safe, especially because it was 339 here. You had another 13 there. Let's see what else happened here. So I would bring it all the way down to here in this case. You could just draw it just where the red line is, but more came in after that, so I'm just gonna incorporate the whole thing. Let's get the edit mode here. Pull this down. So that's how I would draw that zone. So this is where subjectiveness comes in. The better you get at drawing these zones, you can say, you know what, the stop one was really right here. I don't need to incorporate these last few prices. Sometimes it's very clear. Other times, the problem, like I said, this one's pretty clear. So you could have just drawn this, like I was saying, right where this red line stopped on the chart, right? So basically, you could have drawn it where this spiked down to there, right? You don't really have to include these. These are really not part of it, except for a little bit, like I said. But there's other times where it's gonna. I think the Nasdaq example I'm going to show you, if I remember correctly, is it looks something like this. It'll be this, and then it'll plateau. You're like, oh, I don't need to include these prices, and then it'll do something like that, right? And then you really do because it was another like 80 or 90 or 100 or whatever. So, rule of thumb, just and you can change this too, right? So you can change the setting. So if you don't want to, 10 seconds is probably too long for stops. I just want to incorporate. I don't want to miss anything, right? But you could go into your settings, right? And you can change it. You're going to see how this changes here. So if I change this to 1 second, see the difference? And it actually did come down to here. So that was the right thing to do. So this was 83, and then another 269 came in after that. So that was actually correct. So you see what I'm saying? Like, you're better off just following the spike. It's going to save you a lot of mental energy. You don't need to be sitting here saying, well, this thing plateaued here, and I don't need to include, just include them all, unless it's just egregious, like there's no way. The biggest example, like I said, is if you see sell stops, the price goes up here, it's still part of that 10 seconds. Well, that wasn't sell stops up here. Then you can kind of cut it off. In this one, I would just make this one zone. So that's how I would draw that. Let's continue here. I think there was a couple other examples. So here's an example of some buy icebergs, right? And these were back to back as well. So you had 341, obviously drawable. It's definitely drawable. It's 2 times threshold, more than 2 times threshold. Then right after that, you had another 452. So I would just incorporate both these areas, which are pretty much on top of each other. Once again, if you have these bubbles on, take them off. Use your last price line. You got to zoom in to get all your prices. So that spike went all the way up to there during this one, and it came down to here during this one. Oops. Do that. Change this to blue, bluish, whatever color that is. So that's how I draw that iceberg. And then after that, we had, and you can see how this market just took off from these icebergs. I mean, this was over 800 icebergs, or close to 800 icebergs. Buy icebergs, someone's trying to sell it, wrong, gone, right? Not that icebergs are always right. We have different setups, as you're going to see in the course. But point is, these are very important areas. So then, and I can almost promise you, so this is when we talk about simplicity of trading and just thinking about things logically. So whoever sold these here probably held their breath, and then guess what? Here's your puke. There's a stop run, right? So come over here. So this is a great example. One, using the sweeps indicator to help you draw your stop run, right? I'm not going to turn the sweep indicator off because it has to reload then. But you can see here, it really helps you draw these areas, right? So this one's a little confusing because usually this doesn't make sense to me as a trader looking at this. That you don't usually see this where this price already traded, right? So I highly doubt, unless someone just drops stops in here, it would have already triggered the first time it touched over here. So it touched, the price touched there, price touched there. That should have triggered the stops. Somebody came in and swept these and triggered the stops, but I don't think that's the price. I think it was here, but the red line's there and the sweeps started there. This is an exact example of, like I said, sweeps coming in. Somebody could have just put their stop in right there and then stopped out. So, you know, don't question the SI indicator, especially stop runs. I mean, they are spot on. This is just a weird example, of course, during this video. I've never seen this actually, where you see the stop start at where the sweeps start, which had already, the price already traded. So like I would have drawn the zone there because they couldn't have been here because they would have triggered the first time it touched. But regardless, here's the sweeps, trigger the stops, use your sweeps indicator, use your red line to draw the zone. So I would draw the zone there, incorporate all the prices that happened in the spike. That was up to there. Let's turn this a different color. So those are those stops there. Incorporate all the prices. So this is a great example of all stop runs are sweeps, but not all sweeps are stop runs. So you can see here, the stop run was 349 sweeps total, 255 and more stops. That's that. So there were a few more sweeps in the order book, and that's pretty much what triggered the stops, right? Whoever's sweeping the order books. Here, there's no stop run. This is just somebody sweeping the order book, 304. Right, so all sweeps, and we'll talk about this in another video, but this is just good to see in this instance. All stops are sweeps, not all sweeps are stops. Right, and whoever swept that order book didn't work out too well for them. Right, so here's another example. Like I said, we'll talk in another video where these are areas in their own right that you could draw zones on, but you need multiples of our normal thresholds. So I'm not going to get into that now, but it's just a really good example. And then let's see what else we had here. So good example. I mean, this is huge. These are huge values here. You had 516 sell ice here, right? You can see it on the on chart. So this is another example of the price was basically here. You can see it on chart. That was the trade that, and then this thing plateaued. But here's a good example of you see the plateau. You're like, oh, I only need to draw it at one price, 68.90. That's all, because remember, because we're on a minute, so this is going to draw for a minute. Well, the actual price was here, but then there more came in after that. I mean, there's only like 20 something, 25 or 26, but you're only talking a couple ticks. So just get these prices in here, all the prices in here. So this is how I would draw that. That's you use your crosshair, like I said, and come down to this price. So it's not worth trying to like you're talking about a few ticks, just get it all in there, especially when it increases at the end of end of that spike. So I use black for sell ice, as you guys will see in my other videos. So that's how I would draw that zone, right? I think there was one more. This is some more sell ice up here. So this kept going. So more came in right after that, another 268. So you can either draw this on its own. I would, because this happened. So let's see, how long did this happen after? No, it was right after. So what I would do here is I would just incorporate both. And you had some stop runs. These weren't threshold, but we're looking for high concentrated areas. So I would just make this one big zone. Now that's pretty substantial, obviously, but it is what it is. You had 500 here. You can keep this as its own zone, especially if it's that large. But and then you had another 250. So just keep it as one zone. That's how I would do it. This is where subjectiveness comes in. You have to decide. All right, I'm good trading off that zone, or I want to incorporate both. You want to get as much activity into the area that happened in the area to determine what's going on, right? And the trade-off of it. So you can see this market basically held here and then launched. So whoever sold this, it didn't work out very well for them. I don't, again, we talk about all the time. What were they doing? Were they hedging? Were they getting out of longs? Doesn't matter. The point is, whoever was on the other side of this trade was wrong, and the market responded and took off, right? So that was a 40+ tick trade right there. We're not going to get into the trading strategies, but this was the important zone into the close. So that was that. And then finally, let's look at a couple, again, I got to clear this out. So this is Mr. NQ. So you had a threshold stop event here. This was 248. So this is a good example of somebody swept the order book and stops. Whoever's sweeping the order books gets first right to the prices. And then the stops come in. Well, you don't know if these stops were actually down here because they're not allowed to trigger till this person's done sweeping, right? So once this person's done sweeping, yeah, it looks like one big sweep. Well, this person just pretty much swept these prices and then triggered the stops, right? So the point is, you don't know if the stops were really here or down here. They wouldn't have been down here because they would already triggered the first time when these prices traded. See what I'm saying? So when you draw this zone, you don't want to start it right where you see the red line. You want to go a little bit before that because they could have been sitting here, but the sweeps get first right? So the way we're going to draw this, I would not. So this is why I said that other example was really strange because you don't usually see the price traded and then the red line. You usually see there's no red line because the red line would have been here in the first place, that it didn't trigger there, and then it triggered there. So I would draw this where the sweep, where the new price that traded, where the stops could have been. They couldn't have been there because they would have triggered, right? Well, they could have been, but it's very unlikely, right? Unless they just threw them in. So this is where I would draw the zone, starting there, and then incorporate all the prices that happened in the spike. Get your bubbles off, again, to help you. I would draw it up to there. So that's how I incorporate that stop run. So this is another great example of you just want to be careful of, oh, this was it, man. This was just this one spike. I don't need the 10 seconds that happened after that. This wasn't any stops. Well, it did. It was. But then more triggered here, right? So you had originally 185, and then another 60 or 70 came in. So I just incorporate as much of the activity as you can. Don't, you could go granular. It's just gonna take away from your trading if you're sitting here trying. Well, no, that didn't. No, and then we had another 80. I don't know. Should I go? Just get all the prices that happen in the spike is what I recommend. That's what I do. It's what I've done for 4 years, and these are extremely accurate. I think there was one more instance. So you can see the market bounced right off of the zone and took off. This was a stop and hold setup, which we'll cover in another video. And then we had, this was not threshold. This was only 114, so we wouldn't draw that zone. I thought there was one other one in here, but I don't, maybe not. No. So that was the stop example for, oh, this one was earlier. I didn't see this one, so we'll draw this quickly. So this one was 187. So you see right here. Remember, spread out your, zoom in on your chart so you get the prices. You see the red line here. And obviously these sweeps came in. Well, it wasn't that price because I would already triggered the stops. So I'm going to be safe and say the stops could have been there. The sweeps caused it and then caused the stop. So I'm going to start my zone just before where the sweeps came in because they have first right there. Down to there. I think that's correct. Remember, follow the spike. So there you go. So that incorporates all the prices in this spike, right? And that was about it for that. And you can see, as usual, the market responds to this area. So that's zone drawing. I'm going to put another example in as well in the course, just a live example where I was actually giving my room a verbal lashing because no one could understand how to draw these. So hopefully you understand it's pretty straightforward most of the time. Sometimes you got to use a little judgment. It is trading. It's not, everything's not slappy in the face black and white, but hopefully you get the gist of it. And once you understand these areas, it's, you know, that this is the key to trading, is understanding these high concentrated volume areas. Thanks.